requires high-level concentration. The case is titled Ufanisi Technology Limited, UTL. The case is documented in 11 paragraphs. So I'll read the case, then answer the two questions, A and B. Paragraph 1. Ufanisi Technology Limited is a listed company that designs and installs high-technology computers used by multinational manufacturing companies. UTL is located in one of the Pacific countries with almost 90% of its sales being exported. UTL has branches in Europe, Asia, Africa, North America, and South America and employs about 1,000 staff around the world. UTL has international patents covering its technology and invests heavily in research and development. Paragraph 3. UTL has a majority shareholding held by Jack Rongoma, an entrepreneur who has a high risk appetite level. The UTL board of directors constitutes 4 members who are effectively controlled by Jack Rongoma, who is both the chairman and chief executive officer. The 3 other directors comprise his wife and 2 non-executive directors, one of whom occasionally provides consultation services to UTL while the other is long-time family friend. Next paragraph. The board meetings are held quarterly in an informal way through verbal review of sales activities. No minutes of the meetings are maintained. Jack Rongoma is a dominating individual who exercises a high degree of personal control, often bypassing his area managers. Next paragraph. Jack Rongoma is not concerned with short-term profits but with long-term returns. He emphasizes on 2 objectives: sales growth to generate increased market share and cash flow, and investment in research and development to ensure the long-term survival of UTL by maintaining patent protection and technological lead over its competitors. He is in daily contact with all his offices worldwide through telephone, travels extensively around the world, and has an excellent knowledge of UTL's competitors and customers. He uses limited number of non-financial performance measures primarily concerned with sales, market share, quality, and customer satisfaction. Jack Rongoma encourages a culture committed to growth, continual innovation, and high levels of customer satisfaction, which is reinforced by high salary levels. Staff who are not committed to his objectives are easily dismissed. UTL has experienced rapid growth with increased profit for the last 10 years, although cash flow is often low. A high sales margin is achieved because UTL is able to charge its customers premium prices. The computers sold by UTL guarantee high speed and better quality products than its competitors. Jack Rongoma has little time for traditional accounting. Product costing is not seen as valuable because the cost of sales is relatively low and most costs incurred by UTL are incurred well in advance of sales being made. Research and development costs are not capitalized in UTL's statement of financial position. Although budgets are used for expense control and monthly management accounts are produced, they have little relevance to Jack Rongoma, who recognizes the fluctuations in profit caused by the timing of sales of low volume. Jack Rongoma places little value in comparing monthly profit figures against budgets because sales are erratic. However, he depends heavily on spreadsheet to manage UTL's cash flow by using sensitivity analysis against his sales and cash flow projections. Cash flow is a major business driver and is controlled tightly using the spreadsheet model. The major risks facing UTL have been identified as follows. 1. Competitor infringement patterns, which UTL always meets by instituting legal actions. 2. Advanced movement in the exchange rate between the home country and UTL's export markets. 3. The reduction in demand for computers due to economic recession. 4. Failure of continued research and development investment to maintain technological leadership. 5. Failure to control costs. Jack Rangoma believes that most of the above risks could be addressed by his policy of outsourcing services and continuous personal contact with staff, customers, and competitors. Required: A. Critically evaluate the internal control challenges facing UTL, 10 marks. B. Write a report to the board of UTL recommending improvements to the company's risk management strategy, 10 marks. That's the question. May 2018, question 1. The first part required candidates to critically evaluate the internal control challenges evaluate the internal control challenges facing UTL. That is part A. Now, candidates, this question can be answered from different perspectives. In evaluating the internal control challenges facing UTL, I'm going to use the COSO internal control framework. I'll use the COSO internal control framework. The COSO internal control framework. If you are going to sit for the governance and secretarial audit paper, I know you are conversant and familiar with the COSO internal control framework. COSO stands for Committee of Sponsoring Organizations of the Tradeway Commission. And this framework has 5 components. All right? This framework has 5 components. The first component is control environment. Control environment. The second one is risk assessment. The third component, number 3, is control activities. Control activities. Number 4, information and communication. Information and communication. Then lastly, number 5, monitoring activities. Monitoring activities. The question is, evaluate the internal control challenges facing UTL. In answering this question, I'm going to evaluate the challenges facing UTL based on the COSO internal control framework, which comprise of 5 components: the control environment, the risk assessment, control activities, information and communication, and monitoring activities. Now, candidates, the board of a company is expected to establish procedures to manage risk, to oversee the internal control framework and determine the nature and extent of the principal risks the company is willing to take in order to achieve its long-term strategic objectives. That's the role of the board. So we're going to evaluate or to gauge the internal controls of this company on the basis of the 5 components. The first one being the control environment. The control environment, candidates, is a set of standards, procedures, and structures that provide the basis for carrying out internal control across the organization. The board of directors and the senior management should establish the tone at the top regarding the importance of internal controls, including the expected standards of conduct. And the management reinforces expectations at the various levels of the organization. The board sets the tone at the top, then the management reinforces the expectations at various levels of the organization. So the control environment comprises the integrity and ethical values of the organization, the parameters enabling the board of directors to carry out its governance oversight responsibilities, the organizational structure and assignment of authority and responsibility, the process of attracting, developing, and retaining competent individuals, and also the rigor around performance measures, including incentives, including rewards, so as to drive accountability for performance. So that has to be done by the board and be reinforced by the management. That is the control environment. And the resultant control environment has a pervasive impact on the overall system of internal control. That's the first key component. So we need to check, is that the case for this UTL company? Is it the case? And if not so, what are the challenges? So we have to evaluate the internal control challenges facing UTL. I've just explained what control environment is all about. It's a set of standards, processes, structures that provide the basis for carrying out internal control across the organization. And I've said it begins with the board of directors. And it's also enforced by management. The board sets the tone at the top. When the board sets the tone at the top and the management picks and implements, then the resultant control environment has a pervasive impact on the overall system of internal control. That will trickle down to the rest of the members of the organization. So having explained the control environment, let's now gauge or evaluate if that is the case for Ufanisi Technology Limited. So going by what we read, candidates, the board of UTL Limited UTA Limited does not have a properly constituted board of directors. First and foremost, this company's board is not properly constituted because Jack Rongoma, we've read, is the major shareholder. He is also the chairman of the board of directors. At the same time, he is the chief executive officer. We read that his wife is a director of the board, and there are two non-executive directors who are not independent because one of them is a long-term family friend. So candidate, with that, you can see there exists conflict of interest. There is no independence. We've read Rongoma, number one, is a major shareholder. At the same time, he's a chairman to the board, okay? And he's also the chief executive officer. It's a problem right there. His wife is a member of the board. It's a problem because of the issue of independence. Another director is a long-term friend. This is also a problem. The fourth director we've read provides consultation services to the company. That raises the issue of conflict of interest. So this board is not properly constituted. So you can see that is a challenge. This board cannot create a proper, conducive control environment. Cannot set the tone that we are talking about under the control environment component. The board should include a combination of executive and non-executive directors, okay, who are independent. So there ought to be non-executive directors who are independent who should sit on that board so that they can help do what? To provide constructive challenge, to provide strategic guidance, and offer specialist advice and hold management to account. The board should also be supported by a certified secretary who should ensure that the board has policies, there are processes, we have information, there is time and resources that are allocated, and that the board functions efficiently and effectively. So that is a challenge. Then moving on to the second component, risk assessment. Candidates, every organization faces a variety of risks from external and also internal sources. And risk is defined as the possibility that an event will occur and adversely affect the achievement of objectives. So risk assessment involves a dynamic and iterative process for identifying and evaluating risks to the achievement of objectives. Now, risks to the achievement of objectives from risk assessment forms the basis for determining how risks will be managed. And a precondition to risk assessment is the establishment of objectives that are linked at different levels of the entity. The management specifies objectives within categories relating to the operations, relating to reporting and compliance with sufficient clarity to enable, identify and analyze risks to the objectives. Candidates, risk assessment also requires management to consider the impact of possible changes in the external environment and within its own business model, which both may render internal control ineffective. That's what risk assessment is all about. So now turning to this company. Does this company have the mechanisms to evaluate internal and external risks? Now let's begin at the board. We've read that the board meetings are held quarterly in an informal way. We've also seen that the board does not even have an audit committee. There is no audit committee. There is no risk management committee, which are crucial in corporate governance. So that's a challenge. When we weigh the governance practice of this company against the COSO internal control framework, you see the company is lacking at this level of risk assessment, because the board should establish an audit committee of independent non-executive directors. This board does not have independent non-executive directors. And there should be a minimum membership of 3. And if it is a small company, at least 2. And the chair of the board should not be a member of this audit committee. So a small company should have at least 2. And this company we've read is not a small company. We've read that UTL is located in one of the Pacific countries with almost 90% of its sales being exported. It has branches in Europe, Asia, Africa, North America, South America. It's a big company which employs over 1,000 employees. So you can see the company is wanting. That is a challenge, beginning from the board. The board should establish at least audit committee, and they should establish a risk management committee. Let's proceed and evaluate internal controls of this company based on control activities, the third component. Control activities. Candidates are just the actions established through policies and procedures that help to ensure that management's directives to mitigate risks to the achievement of objectives are carried out. And control activities are carried out or performed at all levels of the entity, at various stages within the business processes and over the technological environment. These activities may be preventive or they may be detective in nature, and these activities may encompass a range of manual and automated activities such as authorizations, approvals, verifications, reconciliations, business performance reviews, and so on. We have other activities or processes or structures like segregation of duties, which may be typically built into the selection and development of control activities. And where segregation of duties is not practical, the management selects and develops alternative control activities. So that's what we mean by control activities. Now let us gauge this company vis-a-vis the control activities component. We read the last sentence, the fifth paragraph, that he uses limited number of non-financial performance measures, primarily concerned with sales, market share, quality, and customer satisfaction. The company uses limited number of non-financial performance methods or measures. Now, non-financial performance measures give the information on a company's performance in non-monetary terms. And a company's management needs non-financial measures because it is easy to link them to the company's strategy and also to help reveal the core competencies as well as the areas that need improvement. These non-financial measures also give a more holistic view by assessing impact of external risks that businesses may be facing. Very important. But you read this company uses limited number of non-financial performance. This is a big corporation. Now, examples of non-financial performance measures would include measures like the Baldrige criteria for performance excellence. Other non-financial measures would include the European Foundation for Quality Management. That is the EFQM model. We may even have the balance scorecard. Now, candidates, you may notice I'm digressing, which is still okay. These measures are very important. The Baldrige criteria for performance, the CPE, abbreviated as CPE, is a model that is composed of 7 categories. You have leadership, strategic planning, customer focus, measurement, analysis, knowledge management. We have workforce focus. We have the operations focus, the results. Those are 7 components of the Baldrige criteria, which this company ought to use. Alternatively, the company should use the European Foundation for Quality Management. Okay, the EFQM. Excellence model is a practical tool that indicates the position of business and other organizations on excellence path and helps them to determine their shortcomings and encourages appropriate solutions. Okay, encourages appropriate solutions and is very ideal for large companies like this one. It is used by companies all over the world to, for assessment, self-assessment, for benchmarking, for sharing best practices, and assessing organizations for national quality business excellence awards. The balance scorecard can also be effective, an effective tool that this company can use to measure the non-financial aspects of the business. But we read that the company uses limited number of non-financial performance measures. All right. We also read that Jack Rangomo has little time for traditional accounting. That's a challenge. He has little time for traditional accounting. Now, candidates, traditional accounting refers to the accrual or the accrual basis accounting, which requires an accountant to record an expense when it has occurred and an income when it is earned. Now, the traditional accounting, in other words, is the matching of expenses and revenues. And it allows for easy planning as it enables creation of budgets for organizations' expenses. It may also help in prediction of sales and so on. It is a generally accepted accounting principle. But we read here that the CEO has little time for it. Candidates, this principle allows the expenses and revenues to be matched. The accrual accounting allows for financial statements that are unaffected by cash timing in business negotiations. But the chief executive officer has little time for it. That is a challenge. We also read that research and development costs are not capitalized in the statement of financial position. Candidates, lack of capitalization of R&D, yet the organization invests heavily in R&D, signifies lack of competent accounting staff at UTL. That's a weakness. UTL should capitalize the research and development, showing it as an asset in the statement of financial position. That tells you that this company is not preparing its records based on the international accounting standards. So that again, the company when we gauge it against the COSO internal control framework, we can see the company's internal control system is wanting. Candidates, are you following the evaluation? It's a critical evaluation. We are doing a critical evaluation of the internal control challenges. Let's proceed and gauge this company against the fourth component, information and communication. Information and communication. Communication is the continual iterative process of providing, sharing, and obtaining necessary information. Internal communication is the means by which information is disseminated throughout the organization, flowing up, flowing down, and across the entity. It enables personnel to receive a clear message from senior management that control responsibilities must be taken seriously. On the other hand, external communication is twofold, because it enables inbound communication of relevant external information, and it also provides information to external parties in response to requirements and expectations. Information and communication. Now let's gauge this component against the internal control system of UTL. We've read that the CEO, going by this style of leadership, we can say that this CEO is an autocratic leader. UTL is under autocratic leadership. This Jack Rongoma, we've read, is a dominating individual who exercises high degree of personal control, often by passing area managers. That's the fourth paragraph. Rangomo is a dominating individual who exercises a high degree of personal control, often by passing his area managers. We see even on the board, Jack Rongoma also has effective control over the 4 board members. We read that one of the board members is a wife, another one is a long-term friend, and so on. Okay? We also read that the staff are not committed to objectives. Who are not committed to objectives. The staff who are not committed to objectives are easily dismissed. So again, you see challenges because of the leadership style and the way the information flows in the organization. That poses a challenge. Then let's move on to the last component, which is monitoring activities. This is the last component of the COSO internal control framework, monitoring activities. Candidates, the ongoing evaluations together with separate evaluations are used to ascertain whether each of the these other 5 components are effective. Ongoing evaluations built into business processes at different levels of the entity provides timely information. On the other hand, separate evaluations conducted periodically will vary in scope and frequency depending on assessment of risks, depending on effectiveness of ongoing evaluations, and other management considerations. Then candidates, the findings are then evaluated against criteria which is established by regulators, which is a recognized standard setting by recognized standard setting bodies, or by management, or by the board of directors as appropriate. That's monitoring activities according to the COSO internal control framework. Now coming to this company's internal control system, are there any challenges in relation to monitoring activities as I've explained? We read that Jack Rongoma places little value in comparing monthly profit figures against budgets because sales are erratic. All right? Because sales are erratic. Now, candidates, monitoring is dependent on many factors, one of them being the number of meetings. We've read that the meetings at UTL are held quarterly, and they are also held in an informal way through verbal review of sales activities. We are all conversant with the ICSK standards on board meetings. We know that for the board to sit, there has to be a stated agenda setting out the business to be transacted at the meeting. And all the relevant reports, materials, or papers on the agenda should be given to the members at least 7 days before the date of the meeting. All right? That's not the case. So monitoring may depend on this meeting, but we see the meetings are held quarterly in an informal way. There is also the issue of independence of the board. UTL should strive to have an independent board because independent board members bring knowledge and expertise in areas where the CEO and the management's knowledge may be lacking, such as internal controls, the finance, human resources, marketing, tax, and other areas. So the board should be independent. There's also the matter on financial literacy of the directors. Financial literacy refers to the skills and knowledge that enable informed and effective decisions expected of directors. So a director of a company is expected to have a level of financial literacy that is commensurate with the operational and financial risks of that company. It seems that's not the case for this company because of the practices of the governance practice of this company. So candidates, that is a critical evaluation of the internal control challenges facing Ufanisi Technology Limited. 10 marks. Moving on to part B, I read, write a report to the board of UTL recommending improvements to the company's risk management strategy. Risk management strategy. Now, we've defined risk variously on this many times on this platform. Risk management, we say it is a systematic approach to managing risks throughout the whole organization by identifying, assessing, understanding, acting on, and communicating risk issues. So a risk management strategy typically documents factors such as the objectives and rationale for managing risk, the organization's overall appetite or tolerance for risk, the organization's strategic objectives and strategic or the strategy, the organization's strategic objectives and the strategies deployed to achieve those objectives. We have the key risks associated with the strategies within 1 to 3 year time frame. We have the organization's high-level approach to managing risks. It may also include a plan for progressive enhancement of organization's risk management practices and competencies, including key risk management initiatives. And the risk management policy should clearly articulate the organization's objectives for and commitment to risk management. And the risk management policy will specify many things, including the accountabilities, the responsibilities for managing risk, commitment to the periodic reviews and verification of the risk management policy and framework and its continuous improvement. There may be also links between the policy and the organization's objectives on the other hand, the organization's risk appetite, the organization's rationale for managing risk. We may have the processes and methods to be used for managing risk, the resources available to assist those accountable or those who are responsible for risk. So the question is, write a report to the board recommending improvements to the company's risk management strategy.
No internet is required to study. You can actually download all content at once, prepare your own timetable, and study at your own pace. The video lectures are laced with study techniques and exam tips. Lectures are carefully selected from distinguished institutions of learning like Strathmore, KCA, UON, TUC, among others.
That we are transmitting.
Offering learning materials is our core business. For the last 15 years, we have diligently and consistently provided support for students. Leverage on our experience to boost your chances of passing the impending CASNEP exams. Download pre-recorded CASNEP video lectures at www.manifestedpublishers.com and study offline. For more inquiries, call 0724 173 845.